Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 4th of January. Starting off with the S&P, where fears that we would need to test the old 4700 zone as new support after failing to get up to 4820 proved to be correct. The low yesterday, 46.99, so almost spot on that call. The only problem is that below 4700 there isn't really any charting furniture until the 4580 to 4600 area, and therefore there could just be a straight move down through to that zone. Worst case scenario is 4540, which is the current area of the 50-day moving average, but hopefully we'll get away with the 4700 zone retest, and if we have to then head towards 4600, that will be the worst over the near term. Moving on to the stocks, which are not in, well, most of these are not in such a precarious state as the S&P at the moment. First one is Biologics, and here you can see, if you look closely, after the declines that the shares have delivered over the last year, you can see we've got the possibility of a rising trend channel base, and here also we've got a 50-day moving average bounce, so that's around $4.30. Above that, we're looking for the top of that rising trend channel from back in August as high as $11 by the end of next month. But the key here obviously is that we hold the 50-day moving average and build from there. In fact, also the floor of that rising trend channel. Nice RSI rebound above neutral 50, which is a help to the cause. Next up is stock which is looking pretty encouraging as well at the moment. Here you can see that China Green has soared towards its the top of its rising trend channel and recent resistance. That is around the $4 mark, and what's interesting here is that if we can get through $4 on an end of day close basis, there could be a new leg up towards the resistance line projection from back in March last year as high as $5.50 by the end of next month. Ideally, we stay on the right side of $2.90, as that was resistance on the way down. We looked at the following stock quite recently, Cingulate, and here we've had the double gap higher within a broadening triangle base, and that is looking strong enough in terms of the support that we so far found above the 50-day moving average at around $6. Above $6, we're looking for up to $13 by the end of next month, i.e. we stay above the 50-day line and we don't need to fill the gap down towards the $5 mark. New name is next, and let's see if it's a one which is a regular appearance situation. Here we've got Hongli. The charting picture here is that we've had an unfilled gap to the upside through a rising 50-day moving average, so a very strong signal. That suggests that we can make decent progress within a rising trend channel on the daily chart in place since the beginning of May last year. The top of that channel heading towards $6.20, and we're looking for that as soon as the end of this month, while we remain above that 50-day line and the top of that gap around $2.45. So the bear trap there for December hopefully doing the trick for the bulls. Stock which has been covered a few times here recently has been Jeff's Brands, and it's living up to the coverage at the moment, at least holding steady at the lower levels. Dance either side of the 50-day moving average, currently around $3. Above that, we're looking for the top of that rising trend channel from back in September at $4.75. Best case scenario here by the end of next month is $6.70, but I think we need to get out of this range up to $4.40 and at least the initial channel there, $4.50, before we can assume greater glory for this situation. Obviously, we don't see any price action back below recent $2.50 support. I covered the next stock that we're looking at yesterday, and it's back again today in PolyPid. Here we can see that the shares have delivered on the promise that we had in terms of making progress within a rising trend channel base, the top of that channel there towards $10. And we're looking for $10, especially while we're above yesterday's resistance, or the previous day's resistance on Tuesday around the $6 mark. So above $6, looking for $10 on PolyPid. Next up is a situation which, if anything, is even better than the last one. We've got Pulmatrix, which has broken out of recent neckline resistance around $2.10. So a nice risk reward there on a move potentially towards $2.90 in the top of that rising trend channel from the end of August. All we're waiting for here probably is just for the 50-day line to start pushing up as well and providing extra momentum. The next stock is a new one for the recent past, at least, Praxis, and here a nice sort of handle on that turnaround that we've had. It's like a W-shaped turnaround, but nice bull flag handle there on the right-hand side, and above recent support around $21, looking for as much as $34 by the end of next month or even sooner on this situation. It's good to see recent support at and above old resistance from the end of November around the $20 mark. Going on to another new face, which comes in the form of Sidus space, and here the picture is of a consolidation, of hopefully a positive one, on the at and above the 50-day moving average. That is running currently around the $6.80 mark. Above that, we're looking for up to $15 by the end of the month, and hopefully as high as $24 by the end of next month, which is the upper parallel of the broadening triangle that's been in place here since the beginning of October. On to the last three. First one is coming up exactly now, Sigma Additive, and here we've got a situation where the shares gap through the 50-day moving average at $3.60. Above that, we're looking for $6.75, but we have the problem that I suppose in the post-summer period, any spikes through $6 have been sold heavily. So let's see if the latest spike is not just a one-day wonder, hence why it's really important to stay above that 50-day line at $3.50. A stock which moved from the UK market to the US market is coming up next, Spectral AI, and still we're waiting to see whether the grass is actually greener on the other side of the pond, because it wasn't exactly a triumph on the UK side, and so far we're still trying to find a floor here in the US, but it does look as though there are the first signs of a recovery here, and within this broadening triangle base, the recent support around the $2.30, $2.40 area, but what's encouraging as far as this week is concerned is the way that the shares have gapped up through the 50-day moving average. That does suggest that we've got a bear trap gap reversal, a decent setup, bullish setup above the 50-day line there, and the top of the gap at $2.70, looking for as much as $4 by the end of next month, which would at least take the shares back up to where they were at the end of last year, the best levels from the end of last year. Finishing off with a stock which hopefully will deliver for the bulls. We can see Voyager coming up, and here the situation is that we've got a decent turnaround within a rising trend channel base. The main highlight of the recent past is the way that we've just cleared the old resistance on the way down around $10. Above $10, looking for up to $13 by the end of this month at the top of that rising trend channel from back in August. That's it for me today. More updates tomorrow.